Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today we are on 13th of February between 5 and 5:30 GMT. During this Asian session live market analysis and the forecast webinar, I'm going to give you the session-wise forecast for this week, 13th to 17th of February. Besides, the levels in which the currencies are expected to swing during this week is also going to be given. I will also do the market reading using the initial lows and the highs set by 3:30 GMT using the live market code page. If you got any questions, you can always ask in this window. I'll be able to see the questions and then I will answer to the questions whatever you have in mind. My contact details are given here. For those of you who wanted to get further clarifications or further information on the forecast, you can contact me through email ID doctor@i-knowindices.com. And if you want to chat with me and just get the forecast, then you can add in Skype chat. My ID is iknowindices@hotmail.com. To get more information about my trading system, you can visit the website iknowindices.com. and you'll be able to get the feel of it. So there are three components in my trading system, namely the derived forecast, which is derived based on a sequential statistical analysis, which is recorded as algorithm. Then we fine-tune the forecast derived using the scientific algorithm by market reading technique, identifying the initial lows and the highs around 3:30 GMT and try to find out whether the players are near the high or near the low and how they are trying to swing the market. Thereby, we are able to derive how exactly they are going to make the moves in the market each session. Then, in the event if our understanding of the reading goes wrong, what are the steps by which we will be able to limit the risk and maximize the profit is being discussed in the trading strategy. Now the forecast part of it. It is the second week of February. The market is expected to make the swing and gain moves in other majors, that is Euro and GBP are expected to make the swing and gain moves this week. Then we could see week beginning false move in a brief fashion during the start of the Japanese session. So during the start of the Japanese session, we have seen that they formed the new low in the case of Euro, and they have been holding around in the case of GBP and gained the levels in the case of USDM, but also a nominal swing in the case of USD of USD CAD and Australian dollar. Not much of a variation from that of Friday close. And we'll come across after this a gain in the case of Euro and GBP by end of this session. Then afterwards, they are expected to swing near the low and again come up during that of the European session and gain quickly during that of the US session. Then tomorrow, they are expected to make the swing and slide during that of the Japanese session, then rise during European and US session. Then on Wednesday, swing and slide might be seen during the Japanese session, and the gain could be seen during the European session. That might be short-lived, and again they will be making the swing and drop move. So either way stop-ins they are expected to make before making further rise in the market on Wednesday, 15th of February. So on 15th of February, I'm going to give you the Tracking the Forex Market Together webinar. That is, I will give the live trade calls during the European session around 9 GMT and review the call by 14 GMT during the gap time and the start of the US session, and also give the call for the US session. Then you will be able to understand how we can use the market forecast, market reading, and try to decide on the entry level, and also to use and also use the hedge order to limit the risk, and once the position start making profit, we keep stop at entry and remove the hedge order, and then maximize the profit using the trailing stop and the trailing take profit order. That way we try to earn money from that other market consistently in every trade we enter in. Then on Thursday, swing and firm up is expected to be seen during the Japanese session, and then swing and slide could be seen during European session, and then swing and rise during the US session. Then on Friday, a small dip like today during the start of the Japanese session, and then rise, then swing and quick rise during that of the European session, and then firm up, continue to firm up during that of the US session. The next week, third week of February, it is a trending time. So swing and rise moves may be seen in the market, and from there you will come across more visible gains happening in the market during that of the trend reversal time. The following week, the month-end trend reversal time, that is from 27th of February till March, and then subsequently they are expected to make very aggressive gaining moves in the market. So we'll come across in the market the lower level prolonged consolidation, and then the churning, that is they gain the level quickly and book profit and drop, and again buyback, gain the level and book profit and drop and buyback again. That sort of churning they are expected to do, that they have done it last week, and this week they are expected to make brief dip and then start gaining the level. After making one churning on Wednesday, they are expected to gain the levels in the market Thursday and Friday. Next week onwards, we will come across less drop and more rise moves in the market, and then we could come across shift in trading zone, upward shift in trading zone. During that process, Euro and GBP are expected to gain more levels, and USD and USD CHF are also expected to swing and gain level, and that is how they are expected to make the contrarian move in the market. Among the commodity pairs, they are expected to make either way stop ins. In the case of USD CAD, around the current level of 200 pips on the upside, 200 pips on the downside, like that. And then in the case of Australian dollar, they are expected to gain more levels during that of the this week and the next week. So if you look into that of the net change, you can understand Euro is showing negative net change, USDN is showing positive net change as the USD gaining move. But GBP is also showing positive net change as the USD weakening move. So you come across a contrarian move that USDN and USD GBP both are showing positive net change. USDN is showing USD gaining move, but USD GBP is showing USD weakening move. This way they are trying to gain the levels in the case of GBPN. So they are handling the crosses to start with during start of the week. Then later on they will come to that of the majors. Then in the case of CHF also they are showing positive net change, and GBP is showing positive net change as a contrarian move. But in the case of commodity pairs, they are showing the USD gaining move. So you find Canadian dollar, Australian dollar, then CHF, yen, and euro are showing USD gaining move, whereas GBP is showing USD weakening move. So this sort of contrarian moves, they try to do it in the market in order to handle the respective crosses, and later on they will position themselves in the crosses and then position themselves in the case of the majors, and then try to make visible gaining moves in coming days. So any quick drop is a great buy opportunity in the market. Focus on the forecast. Every session you try to find out what they are trying to do, it whether it is a lower level consolidation or lower level swing to firm up or higher level swing to drop. That way you can watch it and then take your position, do buy and sell trades in all currencies. You will be able to make really nice profit. For that, what you have to do is, during the early or the late sessions, only you can take position in the case of majors. During the mid sessions, you can take positions in the case of crosses when they are near that of the low, not breach the low for more than 30 minutes in your observation during the respective time frame. Then you will be able to see that the position makes 100% profit. So follow the timings given here. They are all followed by that of the players, and they do it in a very systematic way. But they try to confuse us, telling that market has to be followed in the form of the Asian session, Japanese session, Asian session, European session, London session, New York session, etc. They are all misguidance, but follow these session 1, session 2, session 3 timings. You'll be able to really understand how the players are making the moves in the market, which you will not be able to get it in the charts. Coming to the levels in which the currencies are expected to swing in this week, Euro could swing from 1.06 area to 1.10 area in this week. GBP from that 1.2475 to 1.2950 area. And in the case of yen, 130.50 to 117.50. Then CHF is expected to make a drop from that of the high level consolidation of a brief upward stop. When euro is gaining level, USD CHF could make a drop and later on gain the level, but they will make swings, either way swings in the case of USD CAD, and Canadian dollar also they will make the either way swings in order to handle the major Canadian dollar as a commodity pair as well as its crosses, because it's more traded by that of the traders who think that it follows the technicals, but the players make very aggressive move and try to hit the stops of such traders. Then in the case of Australian dollar, you find it could come down to that of 0.7625 area and then start gaining to 0.78 area during this particular week. Coming to the other market reading, you find that euro has not breached the low or the high. Then GBP also, the low is 1.2475 and 2495. It is not breached. It is breached the high 2495 and went up to 2498 and holding around that of 2497. So it indicates that GBP is the first currency to gain, later on Australian dollar, and then euro are expected to gain the levels. Then in the case of yen, it is holding near that of the high after forming the high, and it could make further downward move to closer to that of the low and then start gaining the level. If needed, they may make a brief downward stop and then they are expected to gain the levels in the case of USD-yen. Then in the case of CHF, the low is 1.0027 and the high is 1.0054. They are not breached the low or the high, indicating that they are simply consolidating, giving the confusion to the traders, and later on they will try to make the moves in the market. Then USD CAD, only when they make the moves, they will be able to earn money. But before that, they want the traders to commit. Once the traders are addicted to trading, then they will commit the position. They will not keep quiet. They will commit the position. Then later on, the players will make stoppage to start with. Then USD CAD 1.3085 is the low, 1.3121 is the high. They are not breached the low or the high, which was set around 3:30 GMT. Now it is 5:14 GMT. Still they are not breached it, indicating that they are consolidating. Excepting GBP, nowhere else they have breached the low or the high. Australian dollar 76.59 is the low, 76.84 is the high. They are not breached the low or the high. Then there is a question. I always have a little trouble with a gap time false move in between the sessions. Can you give another example of how to make a gap time entry? Maybe starting with that of the Japanese session. going into that of the European session. Okay, gap time false move. Let me take the focus page. Now today they are expected to make this dip and then rise. Okay, and the gap time starts by 7:30 GMT and the European session starts by 8 GMT. Between 7:30 and 8 GMT, what they are expected to do after gaining the level, they are expected to make some high level swings and make a dip if needed, a brief upward stop and then dip during that of the swing time. From that of the high, may not be able to come up to that of the low, but they will come down a little bit around 15, 20 pips. And then intermediary level, they will not breach and go below. During that of the gap time, the first 15 minutes of the gap time, they will set the intermediary low. Afterwards, they will stop breaching it. That time you can take a buy. Then afterwards, they are expected to make the swing and gain the level during first 30 minutes of the European session. At the time, you can book profit. Afterwards, they are expected to come down again in the process of upward and the downward swing and then firm up. So always keep in mind, before that of the rise, they will make a drop. Before that of the drop, they will make a rise. So that is part of the game. Only then they will be able to induce the traders to commit position and hit their stops. So when they make a downward move, understand they wanted to rise during the session. When they make an upward move during the gap time, then they will make a downward move during the early part of the session. So you have to watch individual currencies. Not all the currencies they will make simultaneous drop or gain. So wherever there are traders have committed more position, they will try to hit their stops by making false move during the gap time. So only when you look into the live market code page, wherever you come across quick move, the market is near the high or the low, there only they will make the gap time false move. So if you follow that carefully, then you can commit position. You'll be able to really see some quick trade profits. If you're able to understand. So in the market reading, we have found that in the case of GBP, they just breached the high and staying above and gone up. But in the case of Euro and GBP, still they are not. So we can wait for the market to make a small dip in the case of Euro and take a buy. And in the case of GBP, already they gained the level. When Euro is making a dip, they could make a brief downward move and then start gaining the level. At that time, you can take a buy around 1.2475 or 85. Then they will make a quick rise during the European and the US session. We can book profit. The case of yen also, at the moment they are making contrarian move by gaining the level in the case of Euro, gaining the level in the case of GBP as well as in the case of USD yen. Later on, they will make one quick drop and then rise in the case of USD yen. At the time, you can take a buy around that of low. They make a brief downward stop or around 113.55 level. Once they don't come down below that, if they happen to make a false move and if they are trapped already, the short sellers, then they will quickly gain the levels. Always keep the hedge order to limit the risk. Then for the question, also how important is it to wait 30 minutes to see if breaching upwards? Is it what you see the players do most time? Yes, during the start of the session or during the gap time, they will try to make upward and the downward move. So whenever you enter into that platform, open simultaneously the live market code page. Then necessarily watch for 30 minutes. So that way it will make you to be calm, and also you will start observing what the players are trying to do, whether they are making an upwards consolidation or a downward consolidation, or whether they are making contrarian moves, etc. Now you find, excepting euro, all other currencies are showing positive net change. So when they are making contrarian move, you can understand they are handling crosses. There is no point in taking position in major at that time. When they are handling crosses, if you take position in major, your waiting will be prolonged. Then you lose your patience. So what you have to do, wait for the session, late session to come by 6 GMT, so that 6 to 7:30 GMT, they will make the quick move in the case of majors. At that time, you watch for about 30 minutes, or from 5:30 to 6:30 you watch, and then you are able to get that feel that market is not going to breach the new low or the low, or not going to breach the high or the new high. Then accordingly you will be able to take position. So in the case of GBP, if you watch carefully, they form the high, then breach to the high, and they are making pip by pip move, which is an intentional move. So the intention is to gain the levels in the market, which is visible. So any dip during the gap time or the session start time is a great buy opportunity. That way you have to read using the live market code page, then commit positions. You will be able to really get good profit. Instead, if you look into the live market code page as well as the chart, then there are two different methods of studying the market. Invariably, you will be confused. Then this is the market timing. So wait always for the earlier the late sessions to commit positions in major, and wait for the mid sessions to happen. So if you have taken the mid session here, the buy position, during the mid session here, you can close the position with a profit. Keep that in mind. So if you've got any question, kindly ask me. Another important thing for watching for 30 minutes is to find out whether it was only a stop point or an extended move or an intentional move. So you'll be able to watch for 30 minutes forcibly, then you become calm. You are able to recognize the type of move they are doing it. Then if it is an intentional move, every dip you can accumulate positions, and definitely you will come across the slow and steady rise. You will be able to book profit in all. So wait for the intentional moves to happen, then commit positions and keep stop at entry at every position. You can add more positions once you identify that they are intentional move, and keep stop at entry once the position makes profit, so that if the market goes against, you don't lose anything, then you can maximize the profit. So that is called opportunistic trading. Instead of becoming addicted trading, be an opportunistic trader. That is, wait for the intentional moves to happen and then commit position. You will be able to really book profit without uncertainty. Then Asia time, mid-session, I thought we cannot enter. Yes, you wait for the late sessions, because if you take position during the mid-session, then what happens? You will be waiting till the late session. They make a small dip during the late session. You will become worried. Instead, you'll be able to take a buy near that of the low, or a sell near that of the high. Intermediary level, if we take, the uncertainty will be more. And to know more about that of the trading strategy, on 15th, I'll be giving the monthly ones webinar, twin webinar, so tracking the Forex market together. During that time, I'll explain in about 4 hours from 9 GMT, about 3 hours from that of 9 GMT, and show you how the market reading has to be done using the live market code page alone. Then you will gain the confidence. So once you use only the live market code page, then you are able to read the intentions of the players well. Then afterwards, you will find trading becomes a child's play. I will show you how exactly you can take the positions live before you. I'll take the position during part 1 and show the results during part 2. You can also find out by yourself by taking positions in a demo trading account and see what is happening around 14 GMT, so that you'll be able to really understand that trading should be an art. It is something like driving a vehicle. Driving is an art. Swimming is an art. So if you feel that your body is so heavy, you will not be able to learn swimming, then you will not be able to learn swimming. But irrespective of the body size, if you think that you will be able to swim and to float on the water surface, you know that dolphins and whales, they are heavier than us, but they are swimming. But it is a question of knack. It is a question of the tactics, how to handle it. So if you learn how to handle, then you will find trading becomes a child's play. Nobody will be able to shake you in the world. And they cannot make you to afraid. When you will become afraid, when you are walking along the road, if suddenly somebody comes and threaten you, immediately it becomes a surprise. Then you become afraid. You become first stunned, then you develop fear because of uncertainty. And whatever the person says, he says that you give me the purse, otherwise I'll stab you. Then immediately you give the purse. You obey to the command out of fear. But later on, you realize that he has only shown a fake knife. But that becomes a too late affair. You would have lost the purse. So in the same way, every time the players try to make quick moves to stun you. So they make the spikes in the market, either on the upside or on the downside, during that of the data release time. If you don't become afraid, then they will try to create a rumor and then make some such moves in the market. So ultimately, their intention is to create the market fear. And once you become addicted to trading, then you think that you are able to come out of the fear by taking a little bit of liquor or taking some other medicines, etc. But you are not able to really come out of that fear. So once the fear is lingering in your mind, it can be easily triggered by the quick moves in the market. When you gaze into that of the chart, what happens? The chart shows a very big candle. Okay, it shows either a green candle or the red candle as a big candle. Why it happens like that? And if you look into that of the move, it would have been hardly 30 pips. But when they are making about 5 to 10 pips consolidation, the chart tend to magnify the candle. Then suddenly, when about 30 or 40 pips swing happens, the 40 pips candle, once it is formed, it cannot be accommodated within the chart. So automatically it shrinks and show that candle in a big way. That way, you really become threatened, because when a green candle is being shown, immediately you think that when there is a small dip, we should buy after the second or the third candle forms the bottom. Then afterwards you find that it might be able to make further move. But what the players do, Such a green candle might be a stop and after you buy, they could make a drop, or it might be an extended move. After the rise, if we take a buy, they don't form the new high, they simply consolidate for about 15-30 minutes and then start making the slide and show you the loss in your account and suddenly make a big drop, and then you find, oh God, what a foolish thing I have done. I have taken buy high. So this is what happens every time to the trader, and simply he says that he is experienced trader. How? By looking into that of various pattern formation in the charts. If you attend to that of the webinars given by various analysts in FX Street and other websites, you find each one is trying to say that I was using earlier the other type of chart pattern, now I am using this. Once it becomes a failure, you will go in for another chart. And you just look at anybody for that matter, they will not consistently give the same concept. They continue to change the concept. They know that it is not working during different conditions of the market. Then you find that they know very well the traders don't remember all the explanations what they gone earlier, and then simply they go in for the new patterns. And that is why they always use the word, I like this particular chart pattern. Where is the question of I like? There is no question of I like. It should give you the result. When I draw a beautiful diagram, I can say I like. But chart is nothing but a graphical representation of market event. Where is the question of I like in it? You should be able to read the intentions of the players with the help of the chart. But unfortunately, the chart does not give the time frame of the moves. You only see that 15 minutes chart or 5 minutes chart, 30 minutes chart, but it does not give each session what sort of move has happened. That is why you find that chart gazing might appear rewarding, but many of the times you would have seen that the stops are being hit. So that is why the analysts have seen that many of the time their calls have really not worked, and they will say because of the noise your stop was hit. Then they start giving recommendation for the breakout trades. You know, about 2-3 years back, everybody was talking about breakout trades. But when the players have just made the breakout and reverse the market, breakout and reverse the market either side, and such trades have become failures. And now you find that invariably they say that wait for the market to settle and then try to take the positions. Wait for the market to settle and then take the position. Conserve the equity, conserve all. So invariably you find that they are try to give defensive trading. But defensive is fine, but there is an element of risk when you are entering into trading and speculations. So any market for that matter, there is an amount of risk, and they can grade the risk as the very low risk, medium risk, high risk, aggressive risk, etc. They are all nothing but the expressions. But once you take the position, you do not know it will end up in aggressive risk or a low risk and things like that. And if you keep 5 pips stop, and if you call it as a low risk and 15 pips stop, medium risk, and 30 pips stop as a high risk, we do not know how to classify the risk. Classify risk is what? The amount of uncertainty going to be there in your trade call. When you say I'll be taking a buy and sell trade here, how much of chances that I'm going to be right and how much of chances I'll be wrong? There comes the risk factor. So probably I'll talk about more about the risk because time is late. So please understand that we have to read the intentions of the players from time to time and then try to enter into the market. not simply speculating and say that no, euro is beaten up too much so it could go up. And that sort of feel is not going to help. So we have to really understand that which way the players are going to do, whether you buy it around 1.0622 and close it around 1.0655, or whether you buy it at 1.0755 and close it around 1.0780, the quantum of profit is the same. Your entry level differs, that's all. So it is not that I'm going to do the bottom fishing, or I'm going to do high risk trade, or I'm trying to catch the falling knife. All those expressions, they are all nothing but the expressions coming out of the excitement or out of deep fear. So what a common trader, a calm trader should do is identify the market is near the low. They don't breach the low for 30 minutes in a session and then try to take a buy. Within the session, you will be able to definitely close with a profit, or take a sell. Within the session, you will be able to close it with a profit. Okay, are we going to take high or close price on breaching? See, when you are looking into that of the chart, then closing of the candle, etc., you take into consideration. But when you look into that of the live market code page, once the high is being set, and not breached, so it is a figure. It is a fourth decimal, one level. That's all. It is the high. Fourth decimal, one level as the low. Probably if the live market code page shows the fifth decimal, then up to that of the fourth decimal you take into consideration, and that will be the high or the low. There is no question of the closing price, opening price. Only in the case of candles you try to do it, because the candle, you find, if it is a 15 minutes candle, the opening of the 15 minutes, closing of the 15 minutes, where the market, all those things ought to be taken into consideration. And it gives a range in which the currencies are swing. That is why you come across the candle or the bar. So don't get confused with that of the code page. It is equivalent to that of the tick chart when you look into that of the live market code page. The most accurate chart in the world will be the tick chart, but it will be unwieldy when you look into that of the tick chart. That is why you go in for an averaging by using 5 minutes, 15 minutes, 30 minutes, etc. Because we require the absolute value when you are trading for next 30 minutes. These are all the recommended trades. Okay, then I'll wind up the webinar. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I have given the forecast and also the range in which the currencies are expected to swing, and also explain to you the psychology of trading. Keep in mind and see that you are able to really trade wisely and read the intentions of the players from time to time, so that automatically you get rid of the market fear. Wish you all the best in your trades. See you on Wednesday.